Lately, we've had lots of volatility in the market's screaming up, the market's crashing on down, and now we know there's a 40% chance the Fed is about to do this. Now we come over and look at the fear and greed index. Right now we're sitting at 30. The previous close was 28. So today we got a little bit less fearful in the market. Now keep in mind, around the holidays, the markets tend to be a little bit more bullish than bearish. And when we come over and look at how the indices fared across the board, the Dow was up 66 points. The Nasdaq was up 192 points. S&P 500 up 43 points, with the Russell 2000 being down 0.53. However, when we look at advancing issues versus declining, we had 47.4% of issues declining on the day. There was 50% of issues actually rising. Now, as we come over and look at the sectors, there was only two sectors down on the day: consumer defensives, followed by industrials. The big leaders out there today was healthcare and technology. Now, as we look at this article right here, the Fed hawkish cut fires up rate hike debate. Rate hike, I thought Jay Powell was going to be cutting rates. I thought the Fed was on our side. Well, if we look right here in this article, it goes on to say, I believe there is now a 40% probability that the Fed will hike rates in 2025. And if indeed inflation is going in the right path, like the Fed tries to lie to us and make us to believe, then why would the Fed be raising rates? And let me know in the comment section down below, do you guys think the Fed will hike rates even one time out here in 2025? Now we come over and look at the economic calendar. Tomorrow we have the Richmond Manufacturing Index coming out at 10 a.m. And yes, I will be streaming live tomorrow morning. So if you don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. Now, as we come over here and we look at some of the stocks out here, let's take a look at some of the high flyers. NVIDIA having a nice day out there, up 3.69%. We look at AMD with the chips up 4.5% for the day. We take a look at Intel. Intel was up 3.48% on the day. Even if we look at Apple making new all-time highs, was also up on the day, up 0.78%. With all the recent volatility we've had in the markets. But if we come over, we start looking, let's say the dollar index. Dollar index today having an inside day. The low was higher than the prior candle's low. The high was lower than the prior candle's high. And normally what this indicates is we're likely going to get a breakout or breakdown from this pattern. However, with tomorrow having shortened trading hours, I don't know that we're going to get that massive breakout or breakdown from this pattern. The jury is still out. We come over and look at the precious metal gold. What do we see? An inside day similar to what we saw with the dollar index. Now, keep in mind, with gold, it's critical we hold this lower swing point at 25.96. If that gives way, we're likely coming all the way back down to the swing point right over here. Then if that breaks, that could actually set up a much larger A to B equals C to D pattern that would take us substantially lower. However, if we can hold this level, there's still a shot that we can hit our ABC target and make a run towards new all-time highs. However, today we look at the 10-year yield on the rise once again. So with the Fed cutting rates, why do the yields keep going up higher? Right now, the 10-year yield is sitting at 4.587. And at some point, this should cause a problem out here for the stock market. However, when we come over and we take a look at the SPY, what have we been talking about ever since the FOMC day? Right here, this big, nasty red candle that we had down. And what did we say? If we can get back above 50% of that candle, it's highly probable we're going to undo that entire move. You look at the volume today was very light compared to the last 3 trading days. Then as we look at the 4-hour chart, look at the MACD indicator starting to round out down here near the bottom. Then as we look at, let's say, the 30-minute chart, notice the MACD indicator is already now above the 0 line, and we do have a good separation of the lines. However, this is still a danger zone, and we really need to clear above the swing point at about 595.75. However, we have another pattern in play as well, and that would be an inverted head and shoulders. Left shoulder right over here with this swing point. The head is this lower swing point. Then we have the right shoulder over here. And what makes this even better is the right shoulder is slightly higher than the left shoulder, and we have the potential for this ABC pattern on the way up. If we simply grab our Fibonacci extension tool, we measure the A to B leg, the B to C leg for the corrective move. We get a price completion up here at about 602.48. Now, when we look at the profiles tomorrow morning, if we are trading above value area high, it's going to increase the probabilities that we're going to go ahead and hit that ABC target to the upside. Then as we dive over, when we look at the futures markets real quick, Now, if you want a way to support the channel and you trade with prop firms like Apex, My Funded Futures, or even Take Profit Trader, use the links in the description box down below to get the best deals. Then as we dive over, when we look at the futures markets real quick, what do we see on the 4-hour charts? We talked about these couple minus development areas we had marked off today. The market simply did not make it down towards those areas. We can also see that we have that larger A to B equals C to D pattern that could be in play. Now, in order for this pattern to be validated, we must break above the swing point right over here. That price point would be 6,050.75. We break above that and notice where the ABC pattern completion takes us, all the way above the point of control from last week. And it takes us above that nasty red candle that J Powell induced. Now, we do have quite the minus development area between the profile right up in here. Notice how large this peak up here sticks out, and notice how large the peak is. I think at some point, I do think there is a chance that we spend a little bit of time in this area trying to fill it out, but keep in mind, we break that swing point, we're going to be looking for upward targets. We come over and we start looking at the daily profiles real quick, and notice today, one of the targets we had to the downside was this minus development area. We talked about that on stream. What do? We hit that level. We also had an A to B equals C to D pattern that also completed right near that area as well. And you can see we just barely wicked that level. That was the bottom of the market. And then we continue to grind up for essentially the remainder of the day. Now, one of the things that we always talk about when we have these large days in the market, and what I mean by that is Friday was quite a large day up in the market. After we get a day like that, quite often the following day ends up being a D as in dog shaped profile, aka kind of a consolidation day. Notice we opened up down here, rallied up, came back down only to close back up. That's a good, and you can see basically just stuck in the range the whole entire day. The good news is a D-shaped profile the next day ends up normally being a breakout or breakdown from that pattern. I'm a little bit concerned, however, that tomorrow's gonna have reduced trading hours. Now, with a D-shaped profile, another characteristic we need to pay attention to, quite often the first move ends up being, so tonight or tomorrow, if we're breaking out to the upside, we got to be on high alert. Could that be nothing more than a trap? And they're about to send the market all the way back down. As we come over and look at the volume profile levels real quick, 6,032 will be value area high. The point of control will be 6,022.5, with value area low being 5986.50. Now, something else I forgot to mention when we're talking about the S&P 500. Pay very close attention to what this chart looks like. Then if we jump over and we look at the equal weight S&P 500, notice RSP was actually down on the day, down 0.22%. So again, we're still not getting a broadening of the rally. We're having a select few stocks help lift the indices higher, aka the Mag 7 stocks. Next, we jump over and take a look at the QQQs. We have a nice bullish wick on the bottom of the candle. MACD, however, is not helping things out. Notice right now we're holding above the anchored VWAPs for the time being. Then as we come over and look at the 4-hour chart, MACD indicator is starting to flatten out near that zero line. That could be constructive out here for the bulls. Then on the 30-minute chart, what do we see? Well, we kind of have that same inverse head and shoulders. Left shoulder, head, right shoulder right over here. Then we have the potential for this A to B equals C to D pattern as well. Now, if we look at where that pattern would complete, right up here about 531.88. So tomorrow, if we're breaking above value area high, I want to go back and target the highs from Friday, but then I want to hold out and see, can we have multiple day runners all the way up here towards that 100% A to B equals C to D target. Next, we jump over and look at the Nasdaq futures markets real quick. And what do we got going on over here? Well, we can kind of see that we almost had that inverse head and shoulders as well. Left shoulder, head, maybe a right shoulder with that wick that we had today. And if you notice, we've already drawn out where the ABC pattern completes. This is something we talked about on the live stream. And notice the 100% level comes where? Very close to the very tippy top of that candle that J Powell induced at the last FOMC meeting. And let's not forget, slightly above that, we do have an untested point of control at 22,301.50. But then as we dive down and look at the daily charts, notice today's profile, a D as in dog shaped profile. And this morning, early on, I was looking to target this P point along with an ABC pattern, which the Nasdaq did not hit the target. That pattern ended up being a busted pattern on the Nasdaq. Now we look at value area high, that'll come in at 21,767. We have the point of control coming in at 21,671 with value area low being 21,611. Now, just like we talked about earlier with a D-shaped profile, it's highly probable the first move ends up being a trap, but with a D-shaped profile, also it usually indicates a breakout or breakdown from that pattern. And it just so happens this D-shaped profile is an inside day as well. Look at the high from the prior day. Look at the high from today. It's definitely lower. Look at the low from today, and then look at the low from Friday. So today's entire range was contained within Friday's move. So again, that's another heads up. Highly probable we're going to get a breakout from this trading pattern. Now, if you want to learn how to automate your trailing stops, make sure to watch this video right here.